Today's show is sponsored by Masterworks. Diversify your investment portfolio today and gain a fractional share in some of the world's most beautiful art by following the link in the description below. You have waited patiently in line for what seems like an eternity. You've put some pennies aside as a deposit, and you have endured countless emails from your automaker offering you all the information you could possibly want about your new car, but not your actual car. But then you get the call. Your car is ready. Come pick it up. But how exactly do you pay for it? We get a lot of emails from people wanting us to discuss the affordability of EVs, with good reason. While electric cars are becoming more common, the amount of money you need to spend to get a shiny new one straight off the dealer lot, or indeed straight from the manufacturer, is going up, not down. In recent years, that is of course due to the increased difficulty automakers are facing getting enough parts to make enough vehicles for us all to buy. Thanks, supply chain woes. And in recent months, that's been exacerbated by sky-high inflation. And as we've covered in recent videos on this channel, if you haven't got a confirmed reservation for your car and a commitment from your dealer that they will honour the MSRP, you are likely going to have to deal with the additional dealer markups as dealerships try to compensate for a lack of vehicle supply by sticking everyone they can for extra fees. In fact, that's the reason we said you shouldn't buy a new EV right now unless you really need to. But what if you are one of those folks who does need to buy a new car today? What if you've had that call from your dealership saying that your new shiny is ready and could you just pop on down with your payment and your John Hancock so you could finalise the deal? And with interest rates getting higher and higher, just how on earth are you supposed to be able to afford that brand new EV? Today, I'm going to tackle that very sticky thorn. How to get the very best financial package you can for your EV. And that means... Wait, what is this? Legal disclaimer? Do I really have to read this out? Really? I mean, they know that... I am not a trained financial expert, nor do I play one on television, YouTube, or in an alternative reality. The tips and tricks we are providing today are for illustrative purposes only and should not be treated as sound financial advice. This channel is not responsible for any actions you may or may not take after watching this video, up to and including signing any contracts, picking the red pill, or playing a war game with a computer AI that turns out to be the potential doorway to a global thermonuclear war. You should always consult a financial specialist before making any large purchase decisions. This video is for entertainment purposes only. Is that okay? Legal is really trying to earn its keep these days. As we detailed recently on this channel in a video that if I gesture wildly here may or may not appear in a YouTube card but should be linked in the description below, it is advisable, when possible, to buy rather than lease your new electric car in this particular financial climate. That's because not only are automakers starting to modify their lease contracts so you can't buy your car at the end of the lease period, but the kind of interest rates offered on leases today are not the best. And as we detailed in that very same video, more wild gesturing, buying a new car from a dealer using the finance package from said car company who made your car may not always be the best bet. Nor indeed is it a good idea to trade in your existing car to said dealership without getting several competing quotes from other auto dealers in the area, especially if your current car is an EV. But there is a big difference financially speaking between a finance payment and a loan payment, so how do you make sure that you are not going to get screwed? First up, you need to make sure you do the legwork ahead of time. That means making sure your credit history is clean and clear, and that you are going to appear to a lender as trustworthy as you possibly can be, and that means having a really good credit score. The earlier you start in this process, the easier it's going to be to get a great deal on your new car, and that means, I'm afraid, sitting down and doing math. If you are in the US, Credit Karma or something similar is a great place to start. Companies like Credit Karma can help you keep an eye on your credit score and make sure that there are no errors in reporting. It can make sure that nobody has tried to use your details to take out a loan you didn't approve, and ensure that the information the credit bureaus have on you is accurate. At one point, I assumed everybody kept an eye on their credit scores, but in recent years I've learned that that is not the case. So if you're someone who hasn't traditionally kept an eye on your credit worthiness, different countries have different companies that do similar things to Credit Karma, it is time to start. This is especially true if you're considering a nice new EV or even a new to you used EV. And if Credit Karma or similar isn't enough for you, consider going to the actual credit reporting agencies directly. In the US, for example, Experian and Equifax allow you to look at and also lock your credit report to ensure that other people don't use your personal information for any nefarious purposes or try and take out loans without your consent. Which brings me to improving and keeping those higher credit scores. The higher your credit score and the cleaner your credit history, which means paying all your bills on time and making sure you keep your existing credit lines in good standing, really helps to get your score up. The more likely it is then that you're going to get a super low interest rate from a bank or other lending organisation. But sadly, even if you pay off all your loans on time and you happen to have credit card balances all below the 1/3 of the total credit line available to you, that may still not be enough to get the best possible new car loan rate. For that, you might have to do some credit hacking. Don't worry, it's all legal. What I'm talking about is getting another credit card or two. While it feels wrong to many people, it does to me, applying for additional credit cards a year or two before you have a planned big purchase can actually help improve your credit score, as credit reporting agencies not only look at how you're managing your credit, but also what your total line of credit happens to be. Even if you don't use those cards or keep a very small balance on them and pay them off every month, your credit score can really improve with a few extra cards. However, and this is a biggie, it's important to space out any new credit cards you get, because every time you apply for one, your credit score will get a temporary hit. Take out too many lines of credit in too short a time, and there be dragons. In other words, this is certainly only one to do if you have lots of time ahead to plan. And as I hinted earlier, when you do have more credit cards, make sure to keep those balances manageable and below 30% of your total credit limit. And for goodness sake, please do not suddenly start putting large purchases on them if you cannot afford to pay them off. Try to pay off your credit cards every month for bonus points, and try to never have more than 1/3 utilised. That means having less than 1/3 of your card's theoretical maximum as an outstanding balance every month. Oh, and I think it does go without saying that you should always check with a financial advisor before doing anything. I'm not a financial advisor, remember, so I don't count. So you've played by all the rules, you've got your credit cards all sorted, and your credit report is sparkling. And now you're ready to finance that new car. What's next? Well, we should probably talk about making sure you have a decent amount of money saved as a down payment on that new car. This not only helps lower the amount of loan you're looking for, but it also shows a commitment to the purchase. If you're able to put 5 or 10% down on your new car with cold, hard cash, your dealership, and actually your lender as well, will usually be a whole lot happier about your purchase. And for that, of course, there are plenty of ways to save money. And after you've gotten your financial house in order and saved a little nest egg of a deposit, investing in a diversified portfolio is sound financial advice, which is where today's video sponsor Masterworks comes in. Through its dedicated investment platform, Masterworks allows you to invest in some of the world's most amazing pieces of fine art, allowing you to make long-term strategic investments for your future. You can buy and sell your art investments on their secondary market as well. Unlike traditional retail investments, which allow you to directly purchase shares in your favourite companies, Masterworks allows you to invest in blue-chip fine art, from artists such as Banksy and Andy Warhol to Picasso and many more. Masterworks' team of art specialists closely track the fine art market, identifying pieces coming under the hammer that they believe are exhibiting strong momentum. Then the painting is securitized, allowing anyone to invest. The piece is held for up to 10 years, at which time Masterworks sells the piece, passing the proceeds back to the art piece's investors, net of fees. As for return on investment, while any investment in financial instruments entails substantial risk, the value of any investment can increase or decrease, and past performance is not a guarantor of future performance. The Art Price Global Index notes that fine art investments have outpaced the S&P 500 by 131% from 2000 to 2018. Or, to put it another way, right now, investing in fine art may get you more for your money than most traditional investment opportunities or indeed bonds. My partner and I have invested in Masterworks, and we like the way its online platform lets us pick a piece to invest in, see how similar pieces have fared on the open market in the past, and track how our investment is performing in real time. And if a change in circumstance means we need to cash out our investments before the paintings we're invested in are sold, we know that we can buy and sell our art investments on Masterworks' secondary marketplace. And unlike cryptocurrency, which is still very much the Wild West, Masterworks files an offering circular with the Securities and Exchange Commission. To check out Masterworks, follow the link in the description, and disclaimer, this is an affiliate link, so we will benefit every time a viewer invests with the platform. As with any financial decision, the more you plan, the better. And for me, when I was buying my latest vehicle, planning ahead really helped. I shopped around a lot, comparing what I thought was going to be the offer from Ford's own finance department with the various loan offers I could get from other banks and lenders in my area. In the end, we found our local credit union was the best option for us, because we not only had several loans active with them, but because they've offered us better deals in the past for buying an EV than we would get buying an ICE car. And unlike big banks, where loans are often sold off or the profits line the pockets of the shareholders of the bank, credit unions work for their members, and as such, they're more likely to offer you a better interest rate and a more favourable credit term than a big bank. Additionally, we found that credit unions are more likely to default to offering longer payoff terms while simultaneously not penalising you for actually paying off your loan early. That means it's possible to find a more affordable finance deal with the ability to pay off more than your minimum monthly payment should you wish to. The important thing here, of course, is to make sure that wherever and whoever you borrow the money from is properly regulated and insured. And again, this does seem like a no-brainer, but you should read the fine print before you make a decision as to who to go with. I'd also recommend you read up on the reviews of existing customers of each lender you're investigating to make sure they treat customers well and they don't strong-arm you into doing things you don't want to. And for goodness sake, if a lender is leaning in with a hard sell and trying to get you to sign, be cautious. A good lender doesn't push you into making a decision that's not right for you, and you should make sure that you truly, fully understand everything about the offer before you sign anything. This includes understanding penalties if they exist, understanding the fees associated with taking out the loan, which frankly can add up to a significant amount of money, any payment holidays offered, and last but not least, the APR of your loan. Additionally, while it might be tempting to wait until the vehicle arrives to get a loan set up, it's always good to start calling around ahead of the arrival of your vehicle. While the lender is usually going to need a VIN number or other details to secure the loan, getting pre-approval for your vehicle loan is usually pretty painless and straightforward. In most cases, lenders will give you a 30-day grace period between you starting the process and actually signing loan documents. This is exactly what I did with my Ford F-150 Lightning. We applied for a loan about a month ahead of the truck's arrival and then signed the paperwork just before it arrived to make sure we had all the funds ready to go when it came off the transporter. In fact, my bank mailed the dealer a big fat check. I also want to talk about not taking out a loan and not buying a car in the first place. Life and the economy changes pretty quickly, so it's important to take a leaf out of Ferris Bueller's book and stop to look around once in a while. You might have thought that that new car was the best idea when you put down your deposit a year or so ahead. But ask yourself if it's really still the best idea before you sign those loan documents. Your lifestyle may have changed, your finances may have changed, and things may be far different than they were. This is something I only know too well. Earlier this year, my partner and I decided not to buy the Ford Mustang Mach-E we'd put an order on because the economy was changing, we wanted the security of having extra money in the bank to deal with inflation, and we had another vehicle on order as well. There's no shame in walking away. Someone else will buy that car, and your dealership will charge them a pretty penny for doing so. My final piece of advice, whatever loan you take out, consider insurance for your new vehicle that will cover the outstanding loan amount on top of your car, often called gap insurance, in the event that if something bad happens, you are covered. While insurance is a pain and hopefully never gets used, there is nothing worse than getting a car written off after an accident and finding that the amount of money your insurance company is prepared to offer you for it is less than the outstanding loan finance you have to pay back. So be it gap insurance or just making sure you have some rainy day money set aside, most financial advisors recommend 3 to 6 months of expenses and savings, you should have more in reserve if you're not going to be taking out a gap policy. Nevertheless, you should be prepared for the worst and hope it never happens, because it rarely does. There you go. That's our advice on how to finance your EV and get the very best rate. But I would love to know your thoughts in the comments below on how you financed your last EV, so get typing. And thanks again to Masterworks for sponsoring today's video. Follow the link below to start your fine art investment journey. If you liked the video, please consider giving it a thumbs up and sharing it with your friends. And if you really liked it, why not leave us a super thanks? It's easy to do, and everything you do send our way goes towards helping us make great content. If you haven't already, make sure you've subscribed to this channel and our other channel, Transport Evolved Take 2, and give that bell a gentle ring to be told when our next video goes live. Thanks on behalf of the entire crew go out to everyone who makes this channel possible. That includes everyone who supports us on Patreon and YouTube, as well as those of you who just watch, share, and interact with the video. If you are a supporter at the charged up level, you'll see your name right here on my right, and if you just joined and your name isn't showing, we're sorry. We currently render the list every week or so, and sometimes our videos are produced a week or more in advance, as this one was. Thanks to our self-driving tier supporters, Chris Maxwell, Pedro Pinheiro, Patrick Boyarski, Bennett Elder, Brian Newton, Dave Kitchen, Michael Goad, Ricky Leon, Andrew Martin, Guido Hota, Brophy Wolf, Tesla in the Gong, Gordon C, Stephen O'Donoghue, Carl Hodgson, Anthony Coates, Regine Fellows, Dan Blair, Jim Boness, Chris Centaur, Chris and Michael Johnson, Peter Dillinger and Denny Hyde, and of course, super out of this world thanks to our Starman level supporters: Anonymous Freak, Marcel Ward, Reggie Watts, Rory Litwin, Joe Bresney, Reed R, JP Fagerback, Russ, Will Graylin, Matthew Drobnak, Caravan Burrowbridge, John Lyons, Andrew Glenn, Paul Conway, Laura Reynolds, Ellery Hensley, and Ian. If you'd like to be part of that amazing list, you can join Patreon at the link below, hit the join button to support us on YouTube, or show us your support through Bitcoin, Ko-fi, or by buying something like this cool t-shirt from our swag store. And if you are unable to support us financially, just know that watching and interacting with the video really makes a big difference. Thanks for joining me, and as always, keep evolving.